Do you even know what you're going to do when Bitcoin gets cut in half? Do you have a plan? Do you have a strategy? I am bringing that to you. I go by JT and I run a crypto hedge fund. If you want to learn more about who I am, what I do, and why my channel can be special to the right individual, click the link tree in the banner. Okay.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged.
Today we're going to get into it. We have an exciting topic, how to prepare for a bear market. And honestly, it starts first with an exit strategy before you click buy. If you clicked buy without an exit strategy, you've made a mistake. And this is my opinion, not financial advice, but as someone who manages other people's money professionally, I gotta say, you had made a mistake. So before you make an investment, you want an exit plan. The exit plan may be, I leave it to my kids, and you're just hodling till you die. I mean, that is an exit strategy. That has its own set of things, by the way, to avoid taxes and all these other things. You got to put it in a trust. How do you do the cold storage, right? Security deposit, what if the bank goes under? There's there's strategy around that exit. If you are trying to accumulate a lot of tokens, a lot of Bitcoin, we'll just do Bitcoin today. If you're trying to get a lot of Bitcoin and you only have a certain amount of principal every year and it's not a lot of size, so you don't have a high income and it really stretches you to even invest in this space in general. If you're in that scenario, some of the best strategy that has worked time over time again for hundreds of years is a discretionarily long strategy with a touch of trimming profit. Okay, I'm going to take you over to the screen. We're going to give you an example here of how this could effectively have made you more Bitcoin over a 5-year period. Okay, and I think it will surprise you how this will work. So if you only have, let's say, and I know this is a lot to some, but let's say it's 10,000 a year and you're only going to put 10,000 bucks into Bitcoin. And let's say you make that decision right back in here because the math will be easier. Let's say you just happen to get one Bitcoin for 10,000 bucks down throughout here. Okay. You get one Bitcoin, one whole Bitcoin. Before you click buy, you have an exit strategy. Let's say every time you get a 2x, you're going to pull back, let's call it 50%. From 10 to 30. That's generally what I do, by the way, just so you know. I'll play with it, maybe a 2.5 to a 2 to a 4, depending on how small the asset is by market cap. But in general, let's say it was a 3x, 50%. So you go from 10 to 30 up here. So that's about halfway through the bull market. Obviously, you don't know that then. 3x is a great return. That's 7 years in the S&P 500. You did it in a year. Don't be greedy. You pull out 10, you have 20 riding. So you pull out 0.3 Bitcoin. You got 0.7 in the market. Then it drops down. It didn't hit 90K yet, so it's not another 50% pull. It drops down to 15,000 again. You pulled out your principal, 10, and you have 0.7 in the market. That principal can be reinvested at this point in time for 0.8. So now you have 1.5 Bitcoin instead of 1 Bitcoin. Then your entry, let's see, it was 10 and then 15. So let's say you entered it, you have 1.5 at 12 versus 1 at 10. See what I mean? And then 1.5 runs at 12. So 3x would be 12, 24, 36. So at 36K again, you pull out your principal, 50%. You're going to pull out, we'll call it 0.75 Bitcoin. You're going to pull out the 15,000 or 20,000. That's what you're going to do. You're going to pull out your 20K. And then what's left is 15,000. It runs to 90. That 15, 3x, you have 45. With free money, and you already pulled out 20. Then you pull out another 25. Or, I'm sorry, you pull out another 15. So you had 35K sitting on the side. And you started with 10. This is not any new money. Okay. When this comes back down, perhaps it could get to 50. I could easily see a 50K Bitcoin. And the reason why is because there's a correlation in the bear and bull markets to the mining cost. Right now, and I'll explain this once we're done. Right now, the average cost is 99,000. Okay. So miners are barely at profit. The basic thing I want y'all to understand is you started with 10. If you would have just held and never captured profit, you would have only had 1 Bitcoin. If you had an exit strategy, you pulled profits, and you were patient enough to let the market settle, right? You would have almost doubled your Bitcoin holdings with the same $10,000, right? That's the general idea I want you all to understand. If your goal is to accumulate tokens, the best way to do it is through capturing some profit and then doubling down when the market is in blood. It's some of the best decisions I've ever personally made. Okay. And that's why I started a hedge fund, because it does very well. At the hedge fund, we did 103% in 16 months, roughly, which is amazing, right? And in that period of time, some tokens met their price targets. We're sitting on profit right now. We have about 25% in cash from profits from our operations. That's roughly, it's turned into about, I don't know, 70% of our LP's principal, maybe 60% of our LP's principal. So a lot of the fund is house money from this strategy. And when the market finally corrects, because it very well will at some point, there's going to be a consolidation period after these crazy legs. We're in a great position to capitalize on it. And now I want to go back to how I could easily see a 50K Bitcoin. When Bitcoin halves, the economic output is cut in half. So if you have 10 million going into a 2 megawatt miner, let's say, it makes, make math easy, 100 Bitcoin a year. It then gets cut to 50, but you still have the same cost, debt, energy. You have all these things. That effectively doubles the cost to produce one Bitcoin. So if you wanted to make the same 100 Bitcoin, you'd have to wait 2 years instead of 1 year. So the costs get doubled. So every halving cycle, the production cost goes up double, plus inflation, because inflation affects energy costs, electricity, and all that. So the cost to produce a Bitcoin continuously rises. It creates an underpinning for Bitcoin in the sense that the Bitcoin price has to outpace the cost of producing a Bitcoin for people to want to invest in the network and support it. That is one of the biggest risks to owning Bitcoin, in my opinion, next to miner consolidation, which is a different thing. All that to be said, every cycle, the bull markets peak right around 300%. 200 to 300% of the cost of producing. Miners are in too much profit. They control the supply. They sell. Their sells hit some leverage points. You do a 15% drop, someone levered up there, that might bring it down another 2%, someone levered there. And then we have this cascading leveraged event where you can get in a few days hundreds of billions wiped out of the market. We've seen it time and time again. Black swan or two, game over. The bear markets bottom out at around 40 to 60% below the cost of production. So how do I know when I start entering the market? When I get a very good discount on the cost of producing a Bitcoin. 50% below the cost of production right now is a $50,000 Bitcoin. We have been there many times. I could easily see a $50,000 Bitcoin. And I had LPs enter the fund, or maybe you had made money and you wanted to invest above 50, 75, 78, you're still in profit, but you'll be at a loss. If you don't capture some profit, you're not going to be able to get your entry lower. Because if you buy it below 78, basically every time you buy an asset at the price that it's at, you're either increasing or decreasing your total entry. It's just an average price that you paid on an asset. If you're a long-term investor, your entry cost is actually something very important that you want to manage. If you bought a Bitcoin at 80,000 versus 10,000, your returns can be a lot different, right? That's the general idea. So the best way to prepare for a bear market is to have an exit strategy before you enter and to start trimming profit when you have significant profit, and then start dollar cost averaging, set up weekly buys, if you will, when the Bitcoin price is at a steep discount, maybe a 20% discount for the cost of production. That rule, by the way, Bitcoin was just at 75K, not, 8 weeks ago now. That is a 20% discount from mining. That's a dip. I put a little in, it ran. It got my entry down as well, because LP's coming in, I have to buy the assets. We're a 5-year lockup. So I think in 5 years, 100K Bitcoin is cheap. I'm not going to freak out about it. 75 can get my entry lower. So can 60 and 50. So we have profit getting ready for a bear market. And that is the best way to do it. Get an exit strategy, buy the good stuff, do your own research. These assets are going to change how we interact with the internet in ways you can't even imagine. It's an exciting space. Good on you for finding a video like this. Make sure you subscribe. I bring you nothing but the best. Until next time, take care of one another. Peace and love.